Hello everyone, welcome back. Today we are going to look at Infosys, one of India's biggest IT companies. We will break down their income statement, which tells us how much money they make, how much they spend, and what's left as profit. By the end, you will know if Infosys is moving in the right direction both for now and for the future. Let's start at the very top, sales. Infosys sold service worth 50,133 crores in 2014. By the most recent period, that number jumped to 1,65,954 crore. So, Infosys is selling more every year. But if you look closer, sales grew by 21% in 2022, then 20% in 2023, but slowed down to just 6% in 2025. That means growth is still good, but not as strong as before. It's normal for huge companies to grow a little slower after getting so big. But making money isn't free. Infosys spent 1,26,213 crore in the latest period. The biggest cost is paying employees, about 53% of all expenses. This makes sense because Infosys is a people-powered company. Over time, we also see manufacturing and other costs rising a bit, which puts pressure on profits. We need to know what's left from the main business. After spending on all these things, what's left is called operating profit. For the latest period, that is 39,741 crores. If you compare to the past, it's going up every year. But look at the profit margin. Back in 2015, operating profit margin was 28%. Now it's around 24%. This means Infosys is making slightly less profit on each rupee of sales because expenses are rising. Infosys also earns some extra money, like from investments. For example, in 2024, other income was 4,711 crores. They also pay some interest and loss a bit each year as their computers and buildings lose value, which is called depreciation. If we see net profit after everything, what does Infosys actually keep? Back in 2014, net profit was 10,656 crores. Now it is 27,300 crores. So over 10 years, Infosys more than double its final profit. If you notice the EPS, the money earned for each share also went from 23 rupees to 66 rupees. And the company has been paying out more and more as dividends over time, which makes investors happy. So overall, in long term, sales grew by 12% per year over 10 years, and profit increases by 8% per year over 10 years. And last year alone, the company gave a 29% return on equity, which means the money invested in the company worked really well. So, in the short term, you might see Infosys sales growth stay a bit slower because it's already a very big company and the IT industry is getting more competitive worldwide. If expenses rise too much, operating margin could fall a bit more. So watch for news about hiring, salaries, or new big contracts. But for the long term, Infosys still looks strong. Profits keep rising, it's paying steady dividends, and its business model is proven. If Infosys keeps getting new global clients and control cost, growth can continue. Maybe not as fast as before, but still healthy. Long-term investors like companies that grow slowly but stay very profitable, just like Infosys. So that is the story for Infosys, using real numbers from its income statement. The company is still growing, still profitable, and still rewarding shareholders, even as things slow down a little. If you found this easy to follow, subscribe to Wealth Growth Club for more videos like this.